Well, welcome everybody to my channel. This is Dan, the Real Estate Man. I'm here with Dave today. Very happy to have you all here today. Very happy to have Dave here. We're here at his office actually recording this video, so I hope you will appreciate it. We have a very interesting topic that we're covering today, which is DSCR loans.
Correct.
And I know DSCR loans, it's not something that everybody's aware of. I think there's a little bit, this product is probably geared more towards investors.
Correct. It is for investors.
In opposed to just a regular person. So that is something that we want to cover today. You who's watching the video, maybe you're a homeowner, maybe you're thinking about, hey, should I invest in real estate? But I don't have all the credit score, or I don't want to mess up my credit because I have other things, or for whatever reason. This is one product that maybe you can leverage. So we're going to learn a little bit more about the DSCR loans and how they work today.
Okay. So the debt service credit ratio or coverage loan is a loan that allows investors to purchase an investment property without having to have income qualification. And it works on coming up with what the appraiser thinks is the market rent for that property. And what we do is we take the market rent, divide that by the mortgage payment. If that ratio is 1 or greater, you could purchase a property, potentially with 20% down if your credit score is above 700.
Okay. So basically, you are using the income that's being generated from the property itself, or the potential income.
Correct.
From that property, in opposed to your personal income or your business income to qualify that asset.
Correct. So, and it's this product isn't for everybody. It's appealing to somebody who has purchased a couple properties and their debt ratio for qualifying for a conventional type of program is maxed out. So this program, we don't have really any income qualification. It is just strictly based on the property and its potential rental income.
What I'm thinking this might be a good option for is, and let's talk about it, right? So if I'm wrong, just let me know. But I'm thinking, I own a property, maybe I have a rental, and I'm starting to think serious about real estate investing, right? Mm-hmm. I have some experience. I have managed properties before. I have a rental that I currently have. Maybe I have a corporate job and I have a decent income. I can pay my bills, but I'm afraid of jumping the gun and buying a large property because my income wouldn't necessarily qualify. Mm-hmm. But I find this great property that's selling for under market value with great cash flow potential, right? Let's say it's a fourplex, or it's an apartment building, 8 units, 6 mm-hmm. units. It's going to cash flow great, It's a tired landlord that just wants to get rid of it, mm-hmm. but they need $1 million. And I don't know if my income will qualify on that $1 million, so I don't pull the trigger. Mm-hmm. Is that something that potentially I could leverage to get something like that?
So this program limits the units up to 4 units. So let's bring it down to 4 units. Let's say it's a 4-unit property. For our area here in Columbus, that might be a $600,000 to $800,000 property. You've got enough money for the down payment in your bank accounts and other assets, but you don't have the qualifying income to support this. This is where that DSCR program would come into play, because we would then look at the market rent for that building and then compare that to the potential mortgage payment that you're paying. And if it meets that ratio requirement, then we can move forward.
Good deal. So basically, you're now qualifying using that property to say, okay, well, I personally don't make that kind of money, but the property does, mm-hmm. because there's 4 units, all 4 are rented. Let's say typical market in Columbus for an apartment, let's say around $1,500 mm-hmm. if it's a nice unit. 4 times that at $6,000. So mm-hmm. now I say, well, that is generating a cash flow of $6,000. If my mortgage payment on that building would be $4,000 mm-hmm. for a $600,000 to $800,000 unit, then that's plenty, I would assume, to qualify. So now a person with maybe a limited income can now own an asset
Correct.
that's worth $800,000
Correct.
as long as they have the down payment.
Correct. So we require 60-day seasoning on all funds you plan to use. But what is also unique about this program, it will allow a gift from a qualified person as long as the borrower has 10% of the funds.
Okay, so even better, right?
Yes.
So maybe I don't have all that down payment, but I have some of it, and I might have a relative or parents, someone who can help me get the rest of it to qualify. What are some of the qualifications? I know it's not for everybody, so
Right.
I'm assuming there's some qualifications for someone who's looking into a DSCR loan.
The program requires that you own real estate for at least a year. We want to see a minimum credit score of 660.
Which, by the way, is very low, right? 660.
It's
Not excellent credit score
right.
by
I would
any
put it at the
means.
bottom of average. When we get below 660, that's
That's
an
red
area where
flags. That's-
it's bad credit.
Yeah.
Not unlendable, but lendable with extra costs.
So 660 sounds very reasonable,
Right,
if you're looking
it's-
at it as an investment, right?
When you're looking at how gentle the underwriting guidelines are for this type of program, yeah, going down to 660 I think is very nice. So own real estate for a year. So we want to have the market rent, and the market rent is determined by the appraiser on the appraisal. So as long as that, we have two ratios. The first ratio is 1. So the market rent in relation to the mortgage payment is that if that is 1 or greater, then you could qualify for the lower down payment requirements. And the down payment requirements are dependent on your credit score. If that ratio is 0.75, so market rent in relation to your mortgage payments, it's 0.75%. So this program will even allow for market rent to be less than the mortgage payment for you to be able to buy the home.
Fantastic. So
And
you
you
don't.
and I both know as investors, you want a cash flow, okay?
So you want the 1 or greater.
Yeah. That's what you want because you want to have a cash flowing property because now you have money coming in, and when you have those servicing events happen on the home, be it you got to replace a furnace
Maintenance or
like
something,
maintenance,
yeah.
so, you've got money for that. But the program does allow for that ratio to be as low as 0.75%. And if that happens, they ask for an additional 10% on the down payment.
Okay. So is the property itself that doesn't qualify? I mean, the cash flow, it doesn't cover all the expenses. I can still work around that if I
Correct.
really want that property. I can still, qualify based on income or additional down payments. I can make that happen still.
Correct.
Fantastic. Okay, so going back to the qualifications, the requirements, you need to own real estate for over a year.
Right.
You have a credit of 660 and
Correct.
above.
Correct.
Anything else in order to qualify for that loan?
So assets
and it's
seasoned
for
at
up
least-
to 4 units, right?
right,
So
up to 4 units.
no large complex buildings,
Correct.
up to a fourplex.
Right. The funds that you're planning to use for the transaction, we need to verify that in bank accounts, investment accounts. If we're having a family member giving a gift, we are going to ask for the person giving the gift for a bank statement to verify that they have the funds too.
Okay.
So there is a verification process on that. Compared to conventional financing, the financial requirements and the financial documentation that is needed is significantly less. So we are looking, how does that property provide income to support repayment of the loan?
Okay, good deal. And I think that's the beauty of it, for a lot of people out there who want to start investing in real estate, but they are afraid because they don't make as much money.
Mm-hmm.
But I think the secret for using that type of product is actually just finding the right property.
Correct.
Because if the property has great potential cash flow, then it doesn't really matter how much money you make, because you're now buying a income producing asset and you're qualifying that purchase based on the asset itself.
Correct.
So even someone who may have an ordinary job or a desk job and they don't make a lot of money, allows them to now become a real estate investor and buy properties as long as you have money for the down payment, or at least for part of that down payment, because
Right.
you can still get a little bit of help.
Right, and it's allowing somebody who doesn't have enough income, be it whatever reason, but they do have a substantial amount of money in their savings to be able to start acquiring properties.
That's perfect. And that money, let's say, tax season is coming up.
Mhm.
Maybe someone, is expecting some money to come in on because of their tax refunds.
Mhm.
And that is money that can be put towards
Right.
investing, opposed to blowing up on a new car or going on
Right.
vacation, right? You can use that money then, put it aside, go find a property, and, start become a real estate investor, right?
Mhm.
Someone who, it's not for a first time homeowner, right? You have to
Correct.
be a homeowner for
Right,
at
you
least
have
a
to-
year,
Mhm.
because again, it's as an investment. But if you who's watching right now, you own your property and now you're looking at, how can I invest and become a landlord, or have a rental portfolio, that is something that would allow you to do that even if you're not making big bucks.
Right, correct.
Good deal.
right.
Anything else we need to know about this loan?
So let me pause here. So one thing I want to talk about is cashing out. I think that's good. So let's talk about LLCs. So it does allow for first-time investors. So do you want to get into reserves? Talk about reserves. Because normally any investment loan has reserves.
Mm-hmm.
So,
Yeah, we can talk a little bit about that. Yeah.
okay. We do have a prepayment penalty, so we should address that. So LLC, what else? And cash out refis.
Okay. So, what else should we know about this type of loan, the DSCR loans? Anything else?
So the program does require some reserves, and depending on your credit score and stuff like that, will dictate what those reserve amounts are. And it's just reserves for that particular property.
Which is very common, right, for investment type of loans,
Correct.
that you have something to fall on,
Right.
in case.
And this loan only requires reserves on the property that is being financed, where conventional financing will require reserves on any properties that you have financed.
Good deal.
Okay.
Good deal. Now, is that something that, say, I want to buy a property and, I have 10%, but I have a friend who has another 10%. Maybe we can buy that under an LLC, so we both own that property. Is that
Right.
something that we...
So the program does allow for an LLC to be able to borrow the money to purchase the property. And for conventional financing, I tell people I can only finance humans, but this program does allow me to finance an LLC. We will need to verify that the LLC has been registered with the state.
Okay.
Okay.
Which is a very simple process as well. So again, if you're watching and you find a property, you can start an LLC with a partner, which doesn't take too much time. You get that registered, and now you have a corporate person that can now own assets, and you can start investing in real estate through that.
And with the LLC, all parties of the LLC will want to see what their credit is like.
Okay.
Okay, they're going to be part of the application.
Absolutely. So if you are looking into a partner to buy a fourplex, make sure that your partner has as good a credit as you have, or decent credit, so that's not going to stop you from buying properties.
Right.
Good deal. Anything else?
So what I do think is what's really neat about this program is if you're an investor out there and you've been sitting on properties for 4, 5, 6 years, from 2020 to now, we're seeing 50% to 60% appreciation on any real estate that you've owned in that period. And as an investor, you're like, how do I access that money? And one way is to sell the property. Another way is this program will allow cash out refinance potentially up to 75% of the value of the property.
So if you are a real estate investor and looking for opportunities and ways to invest, you can do a borrow strategy, right? You buy, rehab, rent, and you can cash out of that property. So now you have up to 75% of that asset that you can now go the next property, and you keep repeating that process as
Right.
well.
Right, yeah, you can snowball it in the fact that if you have a property that you bought, let's say, 10 years ago for $80,000, and now it's worth, let's say, $160,000, we could lend potentially up to $120,000 on that. And that additional money could be used to buy one or maybe two more properties.
Absolutely, that's great. Yeah. So you're using your own assets that you're leveraging with the help of loans and banks. And now over time, you appreciate, it's a natural process of real estate to appreciate over time. And now you're using that appreciation to enable you to buy more assets that will also appreciate over time. So you keep repeating the process.
Right.
And a lot of people who are just starting investing in real estate, they think, well, how, you own 20, 30 properties. How did you get there? Well, maybe they didn't get there on year one, but over time, that property appreciate, and then they leverage the appreciation to acquire more properties.
Yeah, it's with real estate. What's nice about real estate, it typically appreciates. Typically, sometimes it doesn't, but more times than not, it appreciates. And as things appreciate, we in the lending world, we like real estate because it's very easy for us to lend on it. And then you are leveraging that lendability to buy more property, and hopefully you're building your cash flow to the point where you can stop and just concentrate on being a landlord and enjoying your free time.
Absolutely. And that's one of the things that I like to tell the people watching there is, even though this type of loan will qualify on less than one, you really should be looking at one. So that means that all of your cash flow from the property is covering all of your expenses from the property.
Right.
So you never have to take any money out of pocket, and the property is paying for itself.
Yeah, you want to be cash flowing typically. The only times you don't want to be cash flowing, I guess, in my opinion, is if you're buying a property that has equity potential. That'd be the only time that I think I advise a client to.
Because you're already buying it at a
cash
discounted price. And
Right. But I encourage all my real estate investors to be cash flowing, because when a tenant does accidentally or deliberately or unintentionally damages the property, you want to have money there to be able to fix it.
Absolutely, absolutely. And that's true for all real estate investors. If you're out there and you're already an investor, you know what we're talking about. But if you're looking at starting investing in real estate, it's always important to have some money put aside for emergencies or something that comes up. Let's say there's a storm and now you have an insurance claim against the property. You may need some money for that, or you need to do repairs. So it's always good to have that money,
Right.
put aside.
You want to be financially strong as a real estate investor, because you could be thrown a curveball that could damage you financially, and if you're not prepared for that.
Absolutely. Great. Well, I think that is what we had for today for the DSCR Loans. Do you have anything else that would like to add?
So the program does have a prepayment penalty, so it's 3 years. So if you were to sell the property within 3 years or refinance the property within 3 years, you'd be paying the equivalent of 6 months prepayment penalty for whatever you're reducing the principal.
And what other terms? Can you do, 5 years, 10 years, 15, 20? What's the minimum? What's the max?
There are fixed rate loans up to 30 years. There are adjustables up to 5 years.
Okay. Adjustables up to 5 and then fixed up to 30 years.
Correct.
Which is great. Aligns very nicely with most conventional loans, 30 years
Right.
fixed.
So what's nice is they do offer a fixed rate up to 30 years. You as an investor, you at least know stability of what your payment's going to be, and as your rent's coming in, you can plan accordingly.
And that also helps with your cash flowing, right? Because if you're now spreading that out 30 years, you have a tenant there that's paying the property for you, and who knows.
Right, and the program does not have a 75% hit on your qualifying income for, like conventional does. So we are strictly market rent in relation to your mortgage payment. And if you ask me, I think that is a very cool aspect to being able to finance an investment property, especially for somebody who wants to buy another property. They have the assets, but they can't qualify for conventional financing because their debt to income ratio is too high.
Great. So, quick recap, talking DSCR loans. Number one, you can qualify on the income from the property itself. So you don't have to be a high income earner to invest in real estate. There are products out there that will help you get into real estate investing and owning properties. The SCR loans is one option. It's not for a renter that wants to house hack and get into one unit and rent the rest. You have to be a homeowner, have to own real estate for at least a year. But it is for first-time investors. So if you don't have a rental already, you only have the property that you currently live in, and you want to start investing, that is it's something that's allowed under the SCR loans. It is for first-time investors.
So one thing that's important about this program is the property needs to be in a relatively good living condition. So it can't be showing obvious signs of maintenance repair needs. So it can show some minor cosmetic type of repairs that need to be done.
So let's make sure that the property is in good livable condition, right? And if you want to become a renter and you want to leverage that, make sure that your mechanicals, your roof, your foundation, all your big stuff is all taken care of. I mean, it doesn't have to be renovated brand new. Cosmetics, there's some flexibility there, but everything else needs to be working. Right. Thanks for watching today. If you have more questions about DSCR loans, feel free to reach out to me or Dave. I am sharing our contact information down here. Again, thanks for watching. Any additional questions, feel free to reach out. We'll be happy to help you with any questions you may have. I'll see you again in the next video. Bye-bye.